In yesterday's video, we took a look at Ethereum to get a fresh look at where it's currently at with price action. We took a look at how green and red zones help clarify the market's direction. By using this method, it was easy to predict that a crash would occur or that the market was likely to move down. The market had bearish structure on the daily since September 22nd. There was a break of a green zone on the 4-hour, and the 15-minute charts were only printing red zones since all the way back to Wednesday. By Friday morning, we had a perfect storm for shorts. By understanding these zones, we can get direction as well as triggers of when to take action to enter a trade. This next type of zone also helps, but in a different way. By using the volume profile indicator, we can map out areas where price tends to trade the most often. These areas can be magnets for price and can also help with our risk control. These zones also help map out the market psychology because we can see when most participants are in pain or pleasure. Depending on if price is above or below these areas, I typically draw the volume profile indicator using the fixed ranged volume profile tool. I like looking at the volume from particular low points or high points. This gives me a map of the psychology from the lows or from the highs. Often you will see areas converge in the same spot. The key thing to note is the red line. The red line is the point of control, or where most of the trading occurred. These are the most powerful areas to concentrate on. Above or below these lines can be seen as strong bullish or strong bearish sentiments. Similar to finding the point of control, we also want to mark out other areas with high volume. This is very subjective, but helps guide where we might find some resistance. Often these areas are nearly identical to traditional ways to eyeball support and resistance. After marking these areas or zones with rectangles or even lines, it's time to identify areas that are pockets. These air pockets are where a lack of interest in trading has occurred in the past. Price has previously gone quickly through these areas and are likely to go quickly through that same area again. Price will most likely then meet up to a nearby zone like a magnet. Not in a traditional crypto Twitter meaning of the word magnet. These zones do act that way, but also price will continue to gravitate to these areas when price is around this area. It's like price action can't escape and continues to trade at that price. The trick is to trade around these areas, but not get chopped up, because that is very, very easy to do. Now we have some levels and some air pockets identified. It's easy to label the chart into different levels. I have CVX marked off with levels 1 through 5. Ideally, when trading, it's best to buy at the top of a zone and sell at the bottom of the next zone above, or vice versa. These can make for some good targets. Taking a look at current price action, we can see that price resonated at exactly the point of control after the market crash. This isn't really a surprise knowing that this is the exact price most trades took place during the past several months. After finding this level of support, price has now moved to the top of the 2-zone area. The plan of action here would be to watch carefully to see if the zone breaks and goes through zone 3, or if it retreats and goes back down to the point of control. Combining the red and green zones with these volume profile zones give us more clues and ways to get involved in the market. I typically use either purple or blue when marking these zones. Purple is typically a larger time frame taken from a bottom, while blue is on a smaller, more local time frame taken from a high. Later, we can take a look at other interesting ways to use the volume profile indicator for trade triggers and entries on pullbacks. I also want to quickly show curve as it also resonated perfectly with the point of control after the crash, and is also climbing through an air pocket to the next level. The point of control that I'm most interested in is from the highs on July 27th. The price level to watch is 0.78. The area around this price will be a key zone, and I'm looking forward to curve getting above this zone in order to really start achieving that big rally. I'm showing CVX and curve here, but these strategies aren't for long-term buys and holds. They can certainly help in buying and selling decisions, but these zones are much better suited to short-term trading rather than longer investing returns. By watching and rewatching these two videos, gradually these concepts will become more clear. Future videos will emphasize these types of zones heavily, and over time, make more sense. These videos are simple explainers, and not full-on teaching videos, so I would expect plenty of confusion. Questions are welcomed, and I will continue to bring more videos featuring these zones on different markets.